Hello, my name is Troy Epperson, and this is my website, oneononetrading.com. I've been doing trading and educating for many, many years. And if you're that guy that are almost break even, you're break even, you can't quite get over the line into profitability, maybe you could use a couple of hours of coaching that will really help maybe focus you and get you on your path to success. If so, please check out my website, oneononetrading.com. And I hope you enjoy the morning brief.
Good morning, everybody. Welcome to the morning brief. Today is Friday, March 10th. Before I get started, I just have to tell you that I had a bad day yesterday, and so I quit early, and I am not trading today. And the reason why I bring this up is because it's a form of accountability. Every trader must be accountable to his or her actions, and I went beyond my daily limit, and that requires me to stop during that day, finish for the day, and take off another day or two. So, since it is close to the weekend, I decided to go ahead and take Friday off, today off, and reflect upon my actions and upon what I am doing as a trader. Now, this doesn't happen very often. It happens maybe twice a year, maybe three times a year. So it's not something I do very often, but it is something that needs to be in your trading plan. What happens when you go to a certain level? Sometimes it's your fault. You did something wrong, and you deserve to have a timeout. So you're being punished. Other times it's not your fault. It's just the other side of the probability. But still, whenever that happens, you're not in sync with the market, and you do need to take a breather. So I'm not mad at myself or upset with myself. I'm doing what my business plan specifies I do when a losing trade or losing day happens. So it's important that you all do that. That's the way you're going to be successful in the long run, is by taking accountability when you do have losses and not contributing to the negative momentum that creates. So I can't make another bad trade today to add to it because I'm not trading. All right. Well, that being said, Friday, March 10th. So what do we have news-wise? So at 8:30 this morning, we had average hourly earnings, which were a little bit less than expected. Non-farm employment was greater than expected. So, this labor market just continues to ramp up and keep going. The unemployment rate, which is a long-term thing, went from 3.4 to 3.6. This is still 3.6%. It's still really, really, really strong job market. Other than the 2 o'clock federal budget balance, nothing else particularly of interest today. Let's look at charts. Daily chart. Yeah, we came down. We took out that low. That's what we talked about yesterday. Sure enough, didn't quite get down to that 3,900. Remember, we had 3,900 and 4,100 as our kind of extremes on both sides. That being said, we're gapping up very slightly here. But you have to go back and say, where is support? Okay, so we've got a little band of support back here. I would say 38.49 is a pretty decent spot. You've got a couple of highs there, a couple of tails, all good. Maybe even 38.31 might be on my radar today. On the upside, definitely yesterday's high, 40.18. And that's probably as far as we can get if we should somehow rally today. I don't really think that is going to happen, and I'm going to tell you why. Let's go and look at the next chart, because the next chart is very interesting in my opinion, and that is that yesterday we had a very, very down day, and we had down inventory with a little bit of buying coming in at the close, a little bottom picking going on there, but correlated. But if you look at today, the overnight action, we're going to gap up slightly. But look, divergence, price up, inventory down. This is like people are going, I don't care if the price is going up. I am liquidating. That is not good. That is not good. So to me, this is sort of projecting that we may have a hard time today. It would be very surprised. I would not be surprised if we did the gap and crap. where we gap up and then we come back down, because this is saying that we don't care if price is going up, we're still liquidating. So that's just what this inventory chart kind of says, in my opinion. Intraday, look at this big, they really liked one of those numbers. I assume they liked the unemployment number because it was up and worse than expected. But and of course, bad news equals good news. Bad news means the Fed won't react, and so bad news is still good news. It's stupidic, if that's a word. Moronic, I guess would be a better word. But hey, that's the way the market is sometimes. Sometimes it doesn't make any sense when good news equals bad news and bad news equals good news. It is what it is. We've got some nice confluence, though. We've got some confluence here at 94.44, some nice confluence at 39.60 and 39.78.75. I'm going to round that to just say 39.80. On the bottom side, also got some good confluence. We've got 38.80, another level at 38.67, and final level is at 38.48. So those are your intraday levels. The Stock Traders Almanac today is 57.1, so a slight bias to the upside for a Friday in March. Hope you guys have a great day and happy trading. I'll see you guys Monday.